Galane Gold is an unhedged gold producer and explorer with mining operations and exploration tenements in Botswana and South Africa. Galane Gold's management team is comprised of senior mining professionals with extensive experience in managing mining, processing operations, and large-scale exploration programs. Galane Gold is committed to operating at world-class standards and is focused on the safety of its employees, respecting their environment, and contributing to the communities in which it operates. Galane Gold trades on the TSX Venture under the ticker GG.
Ravi Sood joins me now, chairman of Galane Gold. Ravi, welcome back.
Always a pleasure, James.
Ravi, you guys pumped out some financials the other day, and they are pretty impressive considering these are from the second quarter of 2019.
Exactly, yeah. We produced in the second quarter, we released it recently, 8,700 ounces approximately of gold, and that was, we achieved an average selling price of $1,305, had a cash cost for the quarter of $966, and as a result had cash flow from operations of approximately 2.9 million US for the quarter. And that's significant for a company like us with a very modest market cap, but we were really keen to highlight the fact that it was $1,305 was the average realized price for the quarter. Looking at Q3, we're obviously not all the way through it yet, we're 2 months into it almost, but we're looking at a much higher average price, like maybe even approaching $1,500 if things stay where they are. And that has huge, profound implications for a company like us as a gold producer. Mm-hmm. Of course, all gold companies benefit from higher gold price in terms of sentiment and future cash flows and that sort of thing. But
right. It's
very real and present for us as a gold producer making gold each and every day. And if you extrapolate from our results from Q2, and pick your gold price for Q3, you can see the kind of impact it can have on our business.
Yeah, if you had $200 more per ounce, you said 8,700 ounces?
Right.
So that's another 1.74 million.
Of incremental cash flow,
right.
not our cash flow, not our revenue, that's the incremental cash flow from what was already a very good quarter.
Interesting. So, so that puts you on track then for 35,000 ounces for the year?
Yeah, we're forecasting for 2019 approximately 32,000 ounces, sorry, 34,000 ounces. Most of that is from our core operation in Botswana, the Mupane gold mine. And the additional bit is from the Galaxy mine, our operation that we just commissioned this year in South Africa. Mm-hmm. That's in a process of ramping up. The highlights there are that we've got concentrate being produced. We're mining, we're milling, we're shipping the concentrate on a weekly basis. And we're basically in the process of an underground mine of getting into the key ore body, the Galaxy ore body, that's very important for us to get into. So while we have some modest production over the next several months, it's about April 2020 that we hit the important part of that ore body and get into what we would consider a steady state production level in what we call phase one. So about 25,000 ounces a year. A lot more detail available for investors with the technical reports filed on CDAR, of course. But in round numbers, that's the objective, and then lots of room to expand from there. But that's our important first milestone with the Galaxy project.
Sure, and you guys have, you know, on a look-forward basis, you have a lot bigger plans for Galaxy, don't you?
Exactly. So Galaxy's been mined on some basis going as far back as 1888, if you can believe that. It's one of the first gold mines or discoveries in South Africa, and it kicked off a whole gold rush to the region 100 plus years ago. So these ore bodies are well understood, they're huge, there's a large resource there. And we also have neighbors, particularly Pan-African Resources, it's about 30 kilometers away from us. Very similar style ore bodies and deposits. They've been operating, producing 90 to 95,000 ounces a year for many years. Very profitable operation, really the core of that business, and contributing huge cash flow to their company. And they're much deeper than we are, or that we've even explored with our existing ore bodies. So we have a high degree of confidence that we'll be there for a very long time. 1888 is already a long way to look back,
sure.
But there's no reason to believe that we won't be there for a long time into the future. And in terms of increasing the production from that initial phase one that we talked about, the 25,000, the run rate that we will hit next year, two main things. Number one is what we would call a phase two expansion. That's two things: doubling the milling capacity. We've already built the mill to have much higher capacity as it is. Of course, we just have some additional capex as we ramp up to that. That's relatively simple. It's a linear expansion, if you will. Second thing is doubling the mining capacity, and the nature of the ore bodies, the nature of the infrastructure of the mine, we can do that. Additional working capital required, but at these gold prices, our business is generating a lot. So that's the next big growth opportunity. That's basically doubling the potential output there. We still need to do a bankable feasibility study on that, but all that work is commenced and in progress. The next one would be going to actually recovering more of the gold. So right now, the approach we've taken is to ship concentrate, and we have an excellent offtake partner that is paying us a percentage of the contained gold. So we're not doing you could say the last 1 or 2 steps of the processing,
right?
And we're getting 75% of the contained gold.
Wow.
Our neighbors who have a similar metallurgy to their ore bodies, the refractory ore, other issues around it, they've got a BIOX plant running, and they're achieving 90+% recoveries.
BIOX plant is?
BIOX is basically bio-oxidization, so the use of bacteria to do what you would otherwise do through chemical process or physical process to extract the gold from complex ores.
Wow.
And it's been working very well for many years. We do have an old BIOX plant at our operation. We chose not to try to commission it during the phase 1 or early in phase 2. Reason being is they're notoriously difficult to start up. Additional capital required, and certainly looking back over the last couple of years, capital has been scarce in our sector. And finally, and very importantly, you need a continuous, stable source of ore feed to that BIOX plant. You need to feed those bacteria a consistent food supply, and then they can achieve great results. But that leap from 75% recovery to 90+, again, huge impact, very short payback on commissioning that BIOX plant, and that's something we'd definitely be looking at a couple of years out. So not just getting into the steady state of phase 1, huge impact on us as a 30 to 34,000 ounce a year gold producer. Adding another 25,000 ounces of production is a big deal, but doubling that again and then adding potentially another 15% on top of that with relatively low risk incremental investments in an existing operation, not having to do an acquisition, not banking on some discovery or fundamentally changing anything else about our company.
Okay, so since the gold price has sort of started to be solid at $1,500, have you noticed a great influx of interest from the investment community into your company?
It's a 180-degree reversal, James.
6 months ago, nobody cared?
6 months, even 3-4 months ago, nobody cared. And looking back there were a few small pockets of interest, but looking back 5 years, nobody's cared. And in the last few weeks, I've got lots of inbounds from friends and family, inbounds from brokers and high net worth individuals, and inbounds from institutions, smaller opportunistic ones.
Right.
We're not talking about Fidelity calling, but I haven't had any of that for years.
Sure.
So going from 0 to something is a huge move. And I think my observation as a former fund manager and somebody who's really closely follows flow of funds, and that certainly is going to have a huge impact on this sector, people are virtually at zero. People have really been caught flat-footed on this move in gold and precious metals, and the shift in narrative has been so quick that it's not like you're seeing most investors, even the savvy leading-edge hedge fund guys or thought leaders out there, really well positioned on gold and ready for this.
Except Eric Sprott, of course.
Well, he's just been phenomenal, but
he's never wavered.
He's had one setting for a very long time, and he's been mostly right. So good for him.
That's right. So Mark Mobius, 30-year veteran, strategist with Templeton, he was on Bloomberg yesterday, and he was saying that they asked him, "What about gold? Where does gold figure into this negative interest rate environment and bonds?" And he says, "Well, you should be buying gold at any price." He says, any level, just buy it, buy it.
It was a great soundbite and a very quotable line. And I mean, distilling it, I think what he meant was that you shouldn't be distracted by, was it up 1% or 2% or down 3%? The trend is clear. It's upward. And that the move from 1,200 to 1,300 and then the sprint from the 1,300s to 1,500, that's great, but it could actually be a very small part of the ultimate move. And that's certainly what we believe and what I personally believe.
Sure. So the investors obviously are going to be clamoring for gold and gold companies as this price advances. How many companies are there in the entire market, like Galane, that are super undervalued, qualitatively forward-looking statements, small print here, but how many companies are there like yours out there that are actually producing gold at a profitable rate and have expansion potential and yet have a low market cap where there's lots of upside in it, especially in terms of a beta to the price of gold should the price of gold continue to rise?
There are some, and I think you'll find that if you looked at today's gold price and assume that was the going rate for the next few years, you could find a few that are actually really quite dramatically undervalued, but not that many. And in my narrative, I've been telling people this cycle is going to look very different than the last big gold run and mining run. And why is that? A few reasons. The last time we had a big move in the 2000s and gold went from $250, $300 to ultimately peaking at $1,900 plus, you had a huge inventory of projects, discoveries that were made in the 90s, even going back to the 70s and 80s, things that were on the shelf. A lot of them in good jurisdictions, even Canada, Australia, US, and elsewhere. And savvy guys who knew where they were, knew where to find them, and knew what to do, and the capital markets opened the window for them, did something about them. A lot of those projects got built, acquired by majors. They're in some process of development or already running today.
Right.
Since then, despite a huge amount of money spent on exploration in the 2000s and about 10 years ago, very few major discoveries. And what you're going to see in this next cycle is less things to pull off the shelf as development projects, and especially less things to pull off the shelf in what you'd call the good or tier 1 jurisdictions. It's going to be harder and harder to find. So there's going to be more scarcity to actual gold production, and there's going to be more scarcity to projects that are operating in stable jurisdictions. Harder and harder to have interesting scale discoveries at this point, and even harder still to pull something that was already discovered and not yet developed and turn it into a gold mine. So that's all of those things are quite different than what we experienced in the 2000s.
Right. All right, Ravi, let's leave it there for now. That's a great update. Congratulations on a good quarter. Can't wait to see the next one. Full disclosure, I am a shareholder and I am buying the stock. We'll come back to you soon. Thanks for joining me today.
I look forward to it. Thanks, James.